Okay, now we see the provisions regarding provident fund. There are four types of provident fund. First is statutory provident fund, that is fully exempted. That will not comes in your calculation. And second is recognized provident fund. Third is unrecognized provident fund, and fourth is public provident fund. Okay, there are four types of provident funds. Then what is the treatment regarding these four? Okay, first is if you consider the contribution made by employer. If the contribution is made by the employer to the statutory provident fund, statutory provident fund fully exempt. If the contribution is made to recognized provident fund, 12% of salary exempted, remaining is taxable. For unrecognized provident fund, fully exempted. Then for public provident fund, does not arise. This is public provident fund is not for employees. Therefore, it is not a point. Okay. Contribution regarding employer. About this, you remember only 12% of salary is allowable or exempted from tax in case of RPF, Recognized Provident Fund. RPF we call simply as RPF. Then come to the second point, employee contribution. Employee contribution to the statutory provident fund, recognized provident fund, these two comes for ATC deduction. In the deduction chapter, I'll tell you, comes for deduction, not comes for salary. And unrecognized provident fund will not comes for ATC also, and public provident fund is qualified for ATC deduction. Okay, unrecognized provident fund is not qualified for deduction under section 80C. Interest on RPF, interest on provident fund. Statutory provident fund interest fully exempt. Recognized provident fund interest up to 9.5 exempt. And unrecognized provident fund fully exempt. And public provident fund fully exempt. Regarding the refund, statutory provident fund is fully exempt. Recognized provident fund is fully exempt. Unrecognized provident fund is fully taxable. Fully taxable. Public provident fund is fully exempt. This is the point chart, remember, regarding provident fund. Okay. Next we see the an allowance. What is allowance? Allowance is a payment made by the employer to employee in cash in addition to basic salary to meet certain expenses. To meet certain expenses, employer makes payment to the employee along with salary in the form of cash. Remember this. In the form of cash, that is called as allowance. And these allowances are classified into two or three categories. Some allowances are fully exempt from tax, some allowances are partially exempt, and some allowances are fully taxable. Fully taxable, partially taxable, exempted. Okay. Then types of allowance. Fully tax-free allowance. What are the fully tax-free allowance? You remember this. Fully tax-free means not comes for calculation. First is foreign allowance. Foreign allowance. Allowance given to employee for foreign purpose. A special allowance given to employee. Any special allowance, special purpose allowance is given to employee. That special purpose allowance is also exempted from tax. Then allowance from the United Nations organization. This is also fully exempt. Then next is summatory allowance to High Court or Supreme Court judges. It is allowance given to Supreme Court and High Court judges. It is also exempt from tax. Next is traveling allowance, conveyance allowance, uniform allowance, daily allowance, helper allowance. You remember this. Traveling allowance from the point of workplace to the point of residence. That is called as traveling allowance. Conveyance allowance is also from the workplace to residence. Then uniform allowance. Uniform is given by employer to employee in certain sector. For example, KSRTC workers. Uniform is given by the KSRTC department. And in the police department or in the army, uniform is given by the employer. In the security department, uniform is given by employer to employee. Okay, uniform allowance is fully exempt from tax. Daily allowance is also exempt from tax. Daily allowance, whatever expense incur for daily purpose, that is called as daily allowance. Daily allowance, you remember regarding the daily allowance given to MLA, MP, etc. Regarding that point, daily allowance regarding related with MLA, MP is exempted from tax. MLC. Helper allowance. Helper allowance is given to the worker, that is also exempted. And remember, my dear friends, regarding traveling allowance and conveyance allowance, these are the complicated terms. Conveyance allowance and traveling allowance are exempted if you spend that amount. If you make certain saving in that, then the amount saved is to be taxed. For example, traveling allowance is given by the employer to employee to travel in the first class train, to travel in the first class train, berth of the train, and you traveled in the general compartment and saved certain amount. If you tell this explanation to the income tax department, then income tax department levy tax on the saved amount. Remember this point. Okay. Simply whatever amount given by the employer to the employee is spent for that purpose, it is not taxable. If you save certain amount and whatever saving you makes, on that you have to pay the tax. Remember this point. Okay. And fully taxable allowances. What are the fully taxable? Remember this. DNS allowance and DNS pay is the first. Medical allowance is fully taxable. Tiffin allowance is fully taxable. Servant allowance is fully taxable. Hill allowance is fully taxable. Non-practicing allowance. Non-practicing allowance is fully taxable. Warden allowance is fully taxable. Overtime allowance is fully taxable. Project allowance is fully taxable. City compensatory allowance is fully taxable. Deputation allowance is fully taxable. There are 11 allowances fully taxable. Okay, these are the allowances fully taxable. Then come to the allowances partially exempt and partially taxable. Partially exempt, partially taxable. These are the points you have to remember. First is HRA. House rent allowance, I already explained. I will not go for explaining once again. And second point is special allowance for meeting the personal expenses. Special allowance for meeting the personal expenses. Here are some examples. Children education allowance. Children education allowance is the allowance given by employer to employee. I already explained tax-free. I already explained free education or concession education. Employer may provide free education, okay, to the family members of the employee, or the employee may give certain allowance for the education purpose. Allowance for the education purpose. Then what is the education allowance and how to calculate it? Education allowance is to be calculated tax-free and taxable. Okay. So, education allowance given by employer to employee is exempted up to rupees 100 per month per child for maximum 2 children. Remember this point. Per month 100, per child 100 rupee, per month per child 100 rupee, and maximum for 2 children. You remember this point. Examples will come in the days in the coming days. I'll take the examples. No, you don't worry. But remember this point. 100 rupees is the exempted and excess is taxable. And second is hostel allowance. Hostel allowance given by employer to employee for the residential purpose of the children's education. Okay. If the children of the employee are residing in a hostel for education purpose, then hostel allowance is given by the employer to employee. Okay. Then this hostel allowance is also exempt. This hostel allowance is also exempt up to the 300 rupee per child per month maximum for 3 children. Remember this point. This is 100 per month per child, 12 month maximum for 2 children is exempt. Remember this. Okay. And regarding hostel, 300 per month, 300 per month per child, maximum for 2 children is exempt. Maximum for 2 children is exempt, excess is taxable. The next is special allowance for transportation employees. Special allowance for transportation employees, I will explain in the next slide. Okay, I think it is 70% of the total allowance or actual allowance, whichever is less, is exempted. I will clear my doubt and tell you. Special allowance, I will explain the next slide in the Word file. Okay, and fourth is entertainment allowance. Entertainment allowance I already explained in the previous class. You remember this regarding children, education, and hostel allowance. You remember these points, then I'll go to next slide. Then these are the points you remember regarding the salary. What is the salary to be taken for calculation? For entertainment allowance calculation, basic salary is to be considered. Okay, entertainment allowance, exempted amount and calculations, basic salary is taken. Gratuity covered under Payment of Gratuity Act 1972, basic salary plus DA is to be taken. I already explained this. And gratuity not covered under the gratuity not covered by the Gratuity Act 1972, HRA, RPF, leave salary encashment. For these 4 points, basic salary plus DA, if eligible for retirement benefit, then you take. Okay, then if the commission is based on percentage, you take. This is the point you remember. And regarding valuation of rent-free accommodation and concessional rent, all amount received in the form of cash, it may be salary or commission, bonus, allowances, taxable. All the taxable allowances received in the form of cash is to be taken. The list is given there. Okay. And DA is to be taken only when eligible for retirement benefit. DA, if eligible for retirement benefit, you take, otherwise you leave that. Okay, these are the points you have to remember for the calculation of salary. Okay, this is the theory part regarding the salary chapter. Now I'll give you the format of calculation of salary. You see this. This is the form of calculating the salary, computation of income from salary for the year assessment year 2020-21. Okay, I listed some points. I have not covered all the points. Important points I have covered in this table, and those who are interested to score out 100 out of 100 marks, and you go through the book and collect all the points. This is for the students who are near to passing and near to scorers. This is only for a chart, and the top 10 students have to go through the book and remember all the points. Okay. First point is basic salary. You have to take the basic salary. Basic salary you take, if it is month wise, multiply by the number of months worked in that year. Monthly salary into number of months worked in that year is the basic salary. Dearness pay is a part of salary. Dearness pay is a part of salary. It is also same. Monthly dearness pay into number of months worked in a year. Next is dearness allowance. Dearness allowance you take. Dearness allowance per month into number of months worked. This is the third point. Then fourth point, bonus. Fourth point is bonus. This is the fourth point, bonus. You take bonus. You take bonus. Okay. Bonus, if the monthly bonus is there, multiply by number of months, or as per the given instruction, you calculate bonus related to the previous year. You take the bonus. Next is city compensatory allowance. If the city compensatory allowance is given in the problem, you take the city compensatory allowance for the previous year. Next is project allowance. You take the project allowance. Project allowance. Then medical allowance. Okay, these are the fully taxable allowances I collected. Then next is HRA. Okay, you take house rent allowance for the year in the inner column. In the inner column, you take house rent allowance. Then less exempted allowance under section 10 subsection 13A. Under this, you take actual allowance in the particular itself. Then rent paid minus 10% of salary is the second point. Third point is 2/5 of salary or half of salary, means 40% of salary or 50% of salary. 50% of salary comes for 4 cities: Bombay, Delhi, Calcutta, Madras, 4 cities, and remaining other cities you take 40% of salary. Okay, 40% of salary you take, and least of the three is to be taken to the inner column. And out of the total amount, you deduct the exempted. Balance take to the outer column. Okay, this is the point you remember regarding house rent allowance. Next is valuation of rent-free accommodation. Valuation of rent-free accommodation. I already explained this, but clues are here. Valuation of rent-free accommodation. Valuation of rent-free accommodation. Rent-free accommodation. How to value rent-free accommodation? I explained in detail in the previous class, but I will highlight here. For government employee, if for government employee, what is the valuation? You take actual rent as per government rate. Value is for government employee, you take at the actual rent of the government rate. Government actual rental rate you take. Okay, government employee. Then for non-government employee, if the employee is non-government or employee is a non-government, simply you remember government employee, government rental rate is the value of perquisite. It is enough. For non-government employee, you take for non-government employee house owned by employer, owned house, employer house, 15% of salary, 10% of salary, or 7.5% of salary. Population I told in the previous class, based on population, 15%. Okay, if population is more than 25 lakh, 15% of salary, 10 to 25 lakh population, 10% of salary, less than 10 lakh population, 7.5% of salary. You take salary. Okay. Or if house is rental house is rental one, then 15% of the salary, 15% of salary or actual rent, whichever is less. This is simple meaning of valuation of rent-free accommodation. You remember this much only. Okay. Out of these, any one comes to the inner column. Okay. You see here. If the employee is a government employee, rental value comes to the outer column. If employee is a non-government employee, house is owned by employer, out of these three, anyone comes to the inner column. If house is non-government employee, rental building, 15% of salary or actual rental value, whichever is less, come to the outer column. Okay. This is the value of rent-free accommodation. Okay, rent-free accommodation, unfurnished. Okay, for this you add 10% of cost of furniture or actual higher charges of the furniture. Then if you add 10% of cost of furniture or actual cost of higher charges furniture, then it is the furnished value. Okay, the first is unfurnished value, 10% added, and then it is furnished value. If you deduct the rent charged by the employer, then it is the concessional rental value. This is the thing. Okay, regarding rental value. Okay, this is the calculation of rental value. Sorry, rent-free accommodation. Any one point comes regarding the this HRA or rent-free accommodation. Among these two, any one point comes for in each problem of salary. Okay. Next is education allowance. Education allowance you take in the inner column. Education allowance given by the employer to employee, you take inner column. Less exempted if there is only one son. If there is only one son or one daughter, then 100 into 12 into 1 is the allowable deduction. If there are two children, 100 into 12 into 2 is the allowable deduction. If there are 3 children, then let us see here. Employer provided education allowance at the rate of 200 per month. Employer provided education allowance at the rate of 200 per month for 5 children of the employee. 5 children of employee. 200 into 5, 1000 per month. For 12 months, it is 200 into 5, 1000. 1000 into 12, 12,000 is the allowance given by employer. Then what is the taxable and exempted? So in this case, you calculate exempted is only for two children. 100 into 12 into 2 is 2400. 2400 maximum allowable. If there is only one, 100 per month is allowable. If there are two children, 200 per month is allowable. If there are three children, for three children, only for two children is allowable. Remaining one child allowance is taxable. Remember this point. You take in the inner column less exempted, whatever balance remains is the taxable education allowance. In the same way, hostel allowance. You take hostel allowance in the inner column, less exempted allowance 300 per month per child, 300 per month per child for maximum two children. In the same way, you deduct the value of exempted, remaining is taxable. Okay, remaining is taxable. Then come to on-duty allowance to transportation employees. Already told you. Okay, I was doubt 6,000 per month or rupees 70%. This is the point you remember. Okay, this is the partly duty on duty allowance to transportation employee. For example, conductors, drivers of KSRTC or train employees. This allowance is given. This allowance is given to transportation employees. What is the allowance exempted? 6,000 per month maximum exempt. 6,000 per month or 70% of such allowance. Okay, you take the allowance, total allowance given by employer to employee in the inner column. Then deduct the exempted allowance. 6,000 per month is exempted. 6,000 per month per annum, it will be 72, 6,000 into 12, 72,000. 72,000 or 70% of the above value. Whichever is less you take in the inner column, that is exempted, and balance is taxable, you take to the outer column. Okay. This is the point you remember. Then next is valuation of movable asset. Movable asset is given by employer to employee for the benefit of employee. Movable asset is given. Then its value. For example, fridge is given by employer to employee. Only fridge, not the house. Only fridge is given by employer to employee. Okay, fridge is given by employer to employee. Then 10% of cost per annum is the value of perquisite. Remember this point. Movable asset is given. Movable asset means the asset which you can take from one place to another place. That is movable asset. Except land and building. Any asset is given by employer to employee. Okay. For example, fridge is given, or TV set is given, or computer is given to employer by the employer to employee. Okay. Asset is given to employee by the employer, then 10% of the cost per annum is the value of perquisite. Clear? Next point is contribution to RPF. Employer contribution to RPF. Okay, number jumped. Number, I forget to put the number. Employer contribution to RPF. Employer contribution to recognized provident fund. You take in the inner column. Whatever contribution made by the employer, you take in the inner column. Then less exempted RPF, 12% of salary. 12% of salary you deduct. 12% of salary is exempted. You deduct this, and whatever balance remains, this is the taxable contribution to recognized provident fund by the employer. Next point is interest on RPF balance. Interest on RPF balance, I already told to you people regarding the calculation. Here I have taken one method. You take the total interest credited to your account. Total interest credited to RPF account you take and multiply by rate given minus 99.5. Rate given in the problem, rate of interest given in the problem minus 9.5 divided by given rate. For example, 12% is the rate of interest. 12% is the rate of interest given in the problem. Then 12 minus 9.5 you take in the numerator and 12 you take in the denominator. Okay, 12 minus 9.5 means 2.5. 2.5 take in the numerator and at the denominator you take 12 and multiply with the interest, whatever comes, that is the taxable interest. Okay, this is the point regarding RPF and interest on RPF. 2 point numbers I have not given here. And the next point is valuation of motor car. Valuation of motor car I already explained. You remember this table. If the expenses are paid by employer, expenses paid by employer for the big for the small car 1800 per month, big car 2400 per month, multiply these two, 1800 into 12, 2400 into 12. Okay, if driver is there 900 per month, it is 10,800. If expenses paid by employee, small car 600 into 12, 7,200, 900 per month for big car, 900 into 12, 10,800. And driver is there, provided by employer, then 900 into 12 to add. This is the value of car. Okay, regarding this valuation of car, one more comes, that is fully provided for private purpose. I explained there. All the expenses provided by employer, 10% of depreciation, driver salary. 3 points you have to take if car is provided totally for private purpose. If for totally for office purpose, value is 0. This is the car valuation. Next you comes to the domestic servants. This domestic servant is to be taken for only specified associate. Remember this. Specified associate. This is for only for specified associate, and car is also for specified associate. Okay, that for that purpose I mentioned in red color. Valuation of motor car comes for specified associate. Then next is valuation of domestic servant come for the specified associate, not for all. So sweeper, actual salary paid by the employer. Watchman, actual salary paid by the employer. Attender, actual salary paid by the employer. Regarding gardener, you take actual salary paid by employer for the rental house only. If the house is taken by employer on rental base and gardener is provided to the for the purpose of upkeeping the garden along with that rental building, then it is taxable. If the house is owned by employer, then you don't take this item. You don't take the gardener. Gardener is related with company garden. Okay. Then insurance premium paid by employer is also perquisite, taxable perquisite. Insurance premium paid by employer is taxable perquisite. Employee club bill paid by the employer is also taxable perquisite. You take that. And free gas, water, and electricity, as I already explained in the previous class. Okay, this is also for the specified SSC. Okay. If it is from own source, manufacturing cost is the value of perquisite. Or from other agencies, actual higher charges paid is the value of perquisite. This is the point you remember regarding free gas, water, electricity. Then regarding pension, I already explained. You take the pension in the inner column, less exempted pension. That is, if gratuity received, 1/3 of the commuted value is exempt. If gratuity not received, half of the commuted pension is exempt. You deduct remaining is taxable. In the same way, gratuity received. Gratuity under Gratuity Act 1972, calculation is like this. Its calculation is like this. Then for employees not covered under the Gratuity Act, I also calculated the same thing. You take the amount received in the inner column, you write the limits in the particular column. Exempted, you take the inner column, deduct the exempted from the amount received. Whatever balance remains, that is the taxable, goes to outer column. Regarding leave salary, encashment of leave salary, this is the procedure of calculation. You take amount received, then exempted amounts, limits you record in the particular, then list of the amount is exempted, you take inner column and deduct in the inner column, goes to outer column, balance. Okay. Cost of free tour. Cost of free tour is exempted perquisite. There is a limit, I already explained. Then free education. Free education from own source, you value on the basis of cost of education in the same locality for same type of education in the inner column, less exempted amount 1,000 per child per month, maximum for 2 children. You deduct. This is same as education allowance. Education allowance, free education, anyone comes. Okay. And for this, all these items you take the total. Outer column you take the total. Whatever outer column total comes, that is called as gross total income. Gross salary, not gross total income. Gross salary. It is the gross salary. Then out of gross salary, you deduct 3 items. One is standard deduction under section 16 subsection 1A. Before 4 years, it was eliminated. From last year or from the current year, I don't know. It is reintroduced. 50,000 is the maximum amount. I'll confirm this amount in the next class. I'll confirm this in the next class. What is the maximum limit and how to take it, whether it is maximum limit or any other ways of calculation. You remember 50,000 is the maximum limit. It is newly introduced as 16 subsection 1A. 50,000 is the standard deduction. Entertainment allowance, section 16 subsection 2. It is the second one. And the third is tax on employment. These points I already explained. And you take in the inner column. Standard deduction, inner column. Entertainment allowance, taxable in the inner column. Entertainment allowance you take in the particular column. Less exempted limits. Maximum 5,000, 1/5 of basic salary, actual allowance. Least of the 3 you deduct in the particular itself. Remaining take to the inner column. Then tax on employment is a direct value. Monthly, if it is monthly, you multiply by 12, you will get the tax on employment or professional tax. Take the total of the 3 to the outer column and deduct in the gross salary. Deduct in the gross salary, whatever balance remains, that is called as income from salary. This is the format you remember for your calculation and solve the problems. Okay, tomorrow I'll take the example on this. Thank you.